Hello everyone, and good morning, good afternoon, or good evening to whoever is watching currently in whichever part of the world you are. Just hope you are healthy, you are good, and welcome to my health check series episode 1, and also to my channel Joe FTW. FTW, by the way, means for the win. So, okay, before we start, just wondering if there are any Apple hardcore fans here watching today. So if you are, please share in the comments below what you like about your Apple products, and are you already a long time Apple fan, or did you just switch to Apple like myself? So I just switched to Apple last year. I bought a Apple SE phone just to try out, and still realized that I still prefer Samsung because Samsung has a more open-ended way of handling its phones. For example, I can add memory cards as the storage card or dual SIM card, where Apple you only have one slot. So if you want to use SIM cards currently, if you're not using an eSIM, you only can put one card. And then if I travel to different parts of the world, I have to change SIM cards quite often using the Apple phone, so which is quite a hassle. In fact, I'm currently recording with a Samsung phone uh, because of the screen resolution is much better, the camera is much better compared to my SE. Of course, you can buy a better Apple phone, which is the Pro, iPhone Pros, but the price range is going to be quite high. So for me, I'm quite cheap, so I just use a SE. SE is actually the cheaper range of the Apple series. So however, I'm not here to do Apple product review. Of course, if you're still an Apple fan, you are techie, you can still stay to watch because you will never know what you can get out of this health check series episode, right? Okay, so here I will share occasional updates of my portfolio companies I invested in. So this is actually an investment channel, right? Just not to confuse you guys. Being some of you may think that this is actually a tech talk, webcast, but it's actually not. So it's more of an investment channel that I will share my updates on my portfolio of the companies I've been holding and investing in, and also I will analyze them using the bottom up approach. So when I present, I will share with you usually from the quarterlies and then all the way to full year and beyond full year. That means 5 years, 3 to 5 years ahead of how I see these companies doing, right? And of course, pardon me because I am new. You can see that it's my first video log. So I want to journal my research in this video format because I hope that I can make myself more informed of my past decisions, be it right or wrong. Okay, at least I know that I've made this decision before by videoing myself, and then hopefully, okay, all of us can benefit in some way from these videos, especially if you yourself is actually a value investor, okay, like myself, right? So let's move on. So yeah, if you'd like to know why I actually invest in Apple, I always go through a way of actually checking before I invest in any company, right? The SWOT, meaning strengths, weaknesses, opportunities, and threats. So I will always ask myself why invest in the company, and this why will actually bring more conviction to my investment requirement. Okay, so if I'm more convicted, if once I know the strength, weaknesses, opportunities, and threats well, and I'm more convicted, I will tend to be more aggressive in my investment into that particular company. Right, so you can see here, as for the strengths, you can see that I've done some research and noted that the net profit margin has always been consistently above 20%. Okay, it is not very easy to actually get net profit margins above 20%, and Apple has done it, right? This is one of the very few companies that have demonstrated strong consistent net profits. above 20% since 2009. So this is at least a 14 years of strong earning power and has not been breached yet. So what do I mean by strong earning power? Strong earning power means that um, a company can actually generate super profits compared to the rest of the industry. Of course, Apple is not the only one, but the thing is it's very rare and very few. So, which is what I like about Apple, all right? And also, it has a growing fan base of many generations from both young and old. Apple has managed to capture this fan base and capitalize on them. So once they capitalize on them, they tie them into this inclusive Apple ecosystem, which all of you might know. The iCloud, iTunes, Apple Pay, Apple TV, and now with the latest Vision Pro. So if you're an Apple user, how can you quit using it? Because you're already so tight. Once you've actually been using it since young, and you store all your documents, all your data, all your photos into the Apple ecosystem, it's quite hard to actually leave to use another system. Am I right? Okay, so because Apple will now catapult the use of both VR, which is virtual reality, if you have heard of it, AR, augmented reality, and of course, I think this one is where everybody should be familiar, AI, artificial intelligence, on its latest Vision Pro. Okay, this will add on to its portfolio of the ecosystem and for the future of the internet. So having this Vision Pro will be, I believe, the next generation of mobile internet. So if you see the hype about AI recently in the media, all right, this latest Vision Pro launch should be able to catapult Apple into going into this area. So if you notice, long ago, Facebook's Meta has already created their Oculus, which is something similar to the Vision Pro. Right, Oculus is like a VR headset. So Oculus so far has been used to play games only, but I haven't actually dived deep much into the Vision Pro of what its initial use is for, right? But based on the initial reviews about people who have tried using the Vision Pro, it's more like not so much for games. It's more to tie into the Apple ecosystem. Like if you watch Apple TV, they are tying up with Disney. If you notice Disney Plus. So with this Vision Pro, they hope that you can, instead of actually using your phone in the future, you can just use the headset to take over your phone, and you can watch everything in just one use and watch everything in just one using one device. So likely this is going to be quite powerful, and hopefully there will be more users to the Vision Pro that might take over any Apple users' future lifestyle. So yes, the question is, do you think VR, AI is going to take over the world now or in the near future? All right. So I believe many people has asked this question before, and to me, right? As of now, I do not think that it will be the case. So AI is now a bubble at best. All right, I tried both ChatGPT and Bard. ChatGPT is from Microsoft, all right? Bard is from Google, and even the Apple AR GPS in AR format, which is augmented reality format. So yes, please put the comments if you are watching, all right? What you think, because by sharing, I think is good. Like if you can share with everyone your point of views about, I may be wrong. Some of you might be even more experienced or more who are more into the tech stuff, should know better, right? About or you're working in tech, you should know better whether AI has the current capabilities of overtaking someone's work, someone's job scope. I've tried it myself and I don't think so, because it is still very, I would say it's still very mechanical. I don't know whether you agree with me. It's still very mechanical and it hasn't been able to take over human intelligence yet. But being said so, I think that eventually this will happen, where AI is going to really be more powerful and I would say complement our current lifestyles in the generation of the new mobile internet. Okay. So if you're asking me about the threats, okay, I share with you the threats about Apple. Okay, every time I have a strength, opportunity, weaknesses, threat type of analysis, I will always try to counter myself whether like for example threats, whether the threats are real. Okay, if the threats are real, how can Apple actually counter these threats? So if I only can satisfy all these criteria, then my conviction will be stronger. So for the threats, right, everybody would know that Apple is just a IoT, Internet of Things. They have mobile, they have Apple Watch, and Samsung has the phone as well. Samsung has the watch as well. Many of the things most competitors may have, right? So in fact, Samsung and Huawei has actually overtook Apple for a short period of time in terms of market share. But currently, today, Apple is still the biggest market, still has the biggest market share. So for a long period of time, Apple managed to actually stay on the top. I'm not saying that nobody can actually take over Apple, because everyone knows that eventually a small player will come in, more innovative, and then they manage to take over a big giant. So Apple did many years ago with IBM. So I wouldn't say that they are not immune to threats, but so far what I actually see, how their system works, how their which I'll share later, right, how their financials, it is still a very strong company. Okay, and one thing is why Apple has managed to hold on to the top position in terms of market share so far in terms of the iPhone, is because Apple has a very very strong branding, right? So and CEO Tim Cook is known to have keep his Apple system as close loop as possible. So that means he vertically integrates everything from the chips to the software to the hardware. They're trying to actually vertically integrate all these components. That means most of them will be developed in-house, researched and developed in-house, so that this will create the closed loop. So by creating a closed loop, it actually creates a moat. So what do I mean by a moat? A moat means it's very hard for competitors to actually come in to overtake the system for quite a while, which is good. So this is why I feel that Apple is valuable in this sense. Okay, so we talk about the weaknesses. Wozniak, who you know is co-founded Apple with Steve Jobs, he has openly discussed about why he dislikes Apple's direction currently, because it's very close to, as I mentioned earlier in the beginning of my presentation. Before my presentation, I said that what I did not like about Apple is it's not capable to actually open up other functions. For example, like you want to like open up extensions. Yes, open up extensions. So you cannot add like new memory cards. You cannot add like those what you call it, the storage, because I use a lot of storage. So if you cannot add storage for the Apple, if you own an Apple phone, what you do, you have to change to a new phone. You have to buy a new Apple phone which has bigger storage. So Wozniak has criticized this, and he said that most open source engineers will not benefit from learning, expanding, and innovating to make the technology of the world better. So if you look at the later versions of the iPhones, you know, right? A lot of people have been commenting that, I don't know, maybe Apple hardcore fans won't think that way, but most critics will say that what's the difference between the Apple 14 and Apple 15? It's going to be the same. So why should I buy a 15? I might as well just stick with the 14, right? It looks pretty much the same. But from a business perspective though, this strategy is set to lock in users for a long time. Why? See, if you have not enough space, you need to have your appetites change, for example, because maybe you are a photographer, you change your job to become a photographer, or be it a musician or something else. You need higher storage. Apple requires you to upgrade the phone and pay a higher price instead of just using the same phone. So this strategy in the business perspective is a good thing. So of course, like I said, it discourages deep thinking and innovation. However, so this is the drawback. But being said this, all right, if you look at the strategy that they can lock in users for a long time, all right, Apple services, okay, will eventually become the recurring cash cow. Okay, as you can see here, once they're closed loop, it becomes a cash cow, and when it's a cash cow, it becomes a recurring income machine. So you can generate recurring cash with lesser need for new investment to target more customers. So which is why Apple as a business has a very strong conviction for value investor like me to look into, right? Okay, so now we take a look at the Apple's business segment sales for the second quarter of 2023, which was announced in April and March, early April, right? So if you can see here, for the 6 months ended 2023, September 2022 to March 2023, all right, we see that sales from most parts of the world have declined. So the share of revenue in the US, Europe, and China is still the top three, however, okay, but all of them are in decline by at least 3 to 5% since the end of last year. So only Southeast Asia is up a little bit, but I think this decline will continue, okay, representing a weaker economy due to higher global inflation, continued trade tensions, as well as the continued Russia war. So my conservative estimate is that this year's overall revenues will be soft and should decline by at least 4%. So this is what I have estimated. So we can look at the Apple's product segment sales now. So ranging from the iPhone, the MacBook, iPad, wearables, and services, Apple services. So this is the breakdown of their sales by product line. Okay, for the 6 months ended 2022 to 2023, most of these product segments are in decline as well, because of declining sales. Naturally, all the product segments will decline. But however, there's something that should capture your attention. okay, as the Apple services. If you take a look at Apple services, it is the only one other than the iPad. All right, iPad is surprising to me because I didn't know that still many people use iPads, but Apple services is one that, even though the growth is only 5% currently, I see a lot of potential in this product segment. So this to me, as I mentioned earlier in my presentation, is a value yet to be unlocked in the future. However great this value is yet to be seen, of course. But I believe that if Apple is able to actually capture its ecosystem even stronger, this growth will grow even quicker, and it will tie into all the Apple products in terms of growth. And like I said, this part is actually the cash cow to me. So you can see that iPhone sales in the last second quarter of January to March made a slight increase to 1% plus, but however this increase is actually insignificant to its overall sales increase. So that's why I think that Apple sales will be, unless something really strong happens, if not, I feel that the overall second quarter and no, the third quarter and the fourth quarter sales, after that the full year sales will eventually be slower by the end of the year. So now let's take a look at management's outlook of their last second quarter's figures. What is their strategy going forward? So CEO Tim Cook and CFO Luca did actually express confidence that Apple is set to break records for all its installed base of active devices. Okay, despite a challenging year, so they did admit that it's also a challenging year, and I believe all tech companies feel the same way as well, right? But despite that, they are confident, and CFO Luca had mentioned as well that they will be able to generate healthy free cash flow for shareholders by end of this financial year. All right, because of the fact that Tim Cook did say that there will be a record-breaking installed base of active devices for the Apple business. So what does this mean of a higher installed base of active devices? This means that Apple's management is expecting that more and more Apple users will buy more of their products. Okay, like Apple Pay, the Apple TV, anything to do with Apple, more and more people are getting more inclusive. So his belief is that by end of the year they will hit a record-breaking numbers in terms of high installed base of active devices inside the Apple ecosystem. So because of this belief, management has already priced in, okay, stronger cash flows, stronger free cash flows. So what do I mean by this? So from what I see is that because of management's confidence, okay, they want to actually continue focusing on its Apple services products as a potential cash cow for Apple. So I believe this is management strategy going forward, and I think they're moving in the right direction. Okay, so I believe that if they are able to do what they say, I think Apple will be much more valuable, and they can unlock further value. Okay, I think most value investors would like to take a look at the P&L for Apple after talking so much about Apple's directions and the Apple as a business, right? So how they're faring in terms of the profit and loss. So we can see it. I've taken it the P&L, and I've studied the P&L as early as from, I didn't reflect everything here, okay? I studied as early as 2005, right? But I just show you the key ones that I felt was important, all right? Until the latest one, which is the trailing 6 months, 2023. from the last second quarter's announcements in April. So what I've noticed is that Apple has shown resilience in terms of revenue and net profit growth from 2005 to 2022. Alright, let's not talk about 2023 first. So far, the full year growth from 2005 to 2022 has been very strong. And why do I put in the 2009 results in this slide? Is to show you that Apple has performed well, because in 2009 and 2010, this is where the financial crisis is. The mortgage crisis, right? So despite this crisis, Apple has managed to create healthy returns to its investors. And 2021 onwards, all this is also COVID period. So even during COVID, we have managed to see that Apple has managed to return healthy profits to its investors. So this net profit margin has come off, okay. But if you take a look at our net profit margins, every year it has actually been above 10%. So like I said earlier in my presentation, that Apple has managed to hold on to a strong profit margin of above 20%. So we can see this from here about the net profit margins, right? But of course, since 2022, the profit margins have come off a bit, but still in a healthy position because it's still above 20%, right? And of course, near term, I will see a slight decline in sales, like I mentioned earlier. This decline in sales is inevitable, but because of value investors, all our holding power, for me, my holding power tends to be at least 5 years or more. So if my holding power is at least 5 years or more, I identify Apple's potential in the long run as whether their current visions and investments will pay off and unlock further value to shareholders. So if you look at short term, definitely there will be ups and downs, but the main thing is to focus on their vision of their long-term goal, whether their long-term goal can hit what the CEOs have actually mentioned. So if they manage to do so, I believe that there will be further value to be unlocked. Of course, this remains to be seen, and I'm actually looking at early on what I said, Apple Services and Vision Pro. So these are the two things that I'm betting on for Apple. Okay, and for the expenses, I noticed that cost of sales are so far in line with its previous year's quarterly results. Its expenses are also in line with previous year's quarterly results. So should this continue through to quarter 4, I believe that the earnings per share can be maintained somewhere similar to last year. So last year's earnings per share hopefully can be the same as this year, plus minus. Okay. So far when I looked at Apple, there are no mentions of cost-cutting measures like mass layoffs. So if you know, many tech companies have been laying off staff since last year. But as of now, Apple has not mentioned any cost-cutting measures. So this is quite interesting bit to take a look, because if there are no cost-cutting measures, expenses may increase further or may stay the same. I'm hoping it will stay the same, so that the earnings per share could be maintained. Of course, this is an optimistic view, but I will be more conservative and more reserved to my forecasts. Okay, now we look at the balance sheet. So my concern here, based on this chart, is that debt has significantly increased over the years, right? Although the company has paid down some debt, as you can see in the later years, in the recent years, I mean, debt is still relatively high, okay, compared to its early 2000 to mid 2000 period. But fortunately, Apple has managed to generate healthy net returns on its assets, okay, and this has been increasing year on year since early 2000 to today. despite the higher debt levels, as you can see from here. So I look at net ROA instead of the ROA itself, because net ROA gives me a clearer picture of how the company deploys net assets. And I usually set a basic hurdle rate for myself for growth companies like Apple. Okay, of course it depends on the business I invest in. Some businesses are like value plays. If it's value investing plays, then we'll look at different set of hurdle rate. So for Apple, because it's a growth company, I will strip off its debt and focus on its net asset returns. So its latest net asset returns sit around 40%. Okay, better than the industry's gross ROA. So you see the gross ROA is actually 10% for the tech industry as of last year, but Apple sits around 40% in its net return on assets. This gives Apple a huge winning margin. Alright, so without significant updates on any major cost cutting efforts, I believe that the return on assets will be roughly around a similar range this financial year. Okay, and now we look at the cash flow. So for 2023 second quarter, Apple has managed to generate cash flow of $4 per share the latest quarter, right? But this free cash flow is actually 47 times its current stock price. So the industry's free cash flow over price is only 39 times. So this indicates that Apple's current share price is very bullish. All right, so let's take a look at other valuation metrics. So if you base on other valuation metrics, okay, such as the price earnings, okay, Apple's current forward price earnings is around 32 times. While if you take a look, its median price earnings is only 25 times. All right, with industry price earnings at 28 times multiples. So because of this, we already know that Apple is quite a bubble. I would say overpriced. So because it's overpriced, if I were to use a PE forward valuation metric based on my own estimates, Apple share price to me should be around $145 to $150 currently, right? So if there are actually any corrections to $170 to $180, okay, the price is still high. Okay, so unless there are any additional catalysts to fire up the valuation, I would say that currently most of this news has been already baked into the share price, and because of that, I feel that it's a little bit overvalued, unfortunately, right? So why is that so? Okay, I believe that the tech industry overall, even at 28 times, it's already fairly bullish because of the, I don't know, maybe it's because of the AI, okay, or the future earnings expectations by investors in the market are still very, very strong. So it's also dangerous because what if everyone gets it wrong, right? Then prices might correct quite a bit. So based on the discount earnings perspective, I value Apple at least 2 times its 2022 revenues, okay, based on today's forward fundamentals. So at 2 times earnings, I feel that why I value it so low is because as a value investor myself, I always look at margin of safety. As long as there's a good margin of safety for a company and you buy in at a good margin of safety, the chances of you yourself getting it wrong will be lesser, and you can get a better night's rest. So I'm actually quite risk averse compared to other investors out there. which can be, like I said, if I were to explain it, uh, which is actually not a very good thing, because if you're too risk averse, chances are you might lose opportunity that comes by. But again, because you're risk averse, the chances of you actually making decent returns in the market should be fairly better. Okay, this is what I feel. So okay, back to the topic. I think that market has actually indeed, like I said, overvalued the AI possibilities. Okay, because of the media hype about AI and how AI has pushed most tech company valuations through the roof, making it whatever prices Apple is currently now, it's at best speculative already. It's no longer a value play. It's when you go into the market at current prices now, it's speculation. Okay. Okay, so I'd like to come to the conclusion. Right. Apple third quarter earnings is coming in early August. Okay, I can't wait to see what is in store for Apple shareholders on the third quarter. But I believe it's fairly muted. Like I mentioned, I'm not sure if there's any upside to its third quarter earnings. But I think the Apple current valuations is already overbid. Okay, as I shown earlier. Fundamentals have already shown a slowing down, because the last 2 quarters have been quarter on quarter decline. So will it pick up the next 2 quarters? Remains to be seen. So if it does, all right, then good for all of us, because Apple to the moon, right? Apple to the moon, more than $200 for the win, right? It's good for us as well. So if you like to take profit at around $200, go ahead. But if it drops, okay, it's so good, because if it drops, we can accumulate our position as a value investor. So either way, for value investors, the good thing is either way, it's also a win for us. So that's why I say it's for the win. So I hope you like my first topic on this Apple. Okay, I will share with you more health checks for other companies as well. And if you'd like me to review other companies on your behalf, you can private message me as well. Okay, and then I'll be happy to share with everyone about new companies that you might have found. And if you're a value investor yourself, it's great as well, because sharing can actually help us by helping us grow, right, our knowledge, and we can learn from each other's mistakes. So have a great weekend, and I'll be back again to share my other episodes soon. All right, have a good one and take care. Bye.